Gold has been on a generational run and it is sending a massive warning to the market. It is screaming signs of a recession, but at least that's what they want you to think. Now, today I'm going to line out how this gold run isn't actually anything new, and the fact that gold is ripping might actually not be as negative as you might think. But first, let's dive in to what we see from the gold market, as we've seen new all-time highs, passing 4,300 4,000, $383. And of course, Peter Schiff is trying to dunk on everybody, saying it's above 4,500 for the first time ever, and silver trading at all-time high. He's saying that this is a bull market and that investors who wait on the sidelines should do it as quickly as possible and not wait for another bear market. But what I think is very interesting is that gold was a little changed following a 3-day rally, and traders are starting to take some profit, at least allegedly. But technical indicators support the selling of gold, even though it's hitting a new all-time high. And if you look at the way that gold has gone, it's gained 70%, its best annual rally since 1979. Now, for those of you guys who know and love my channel, make sure you're subscribed, one. But two, you guys know that I always bring up the year 1971, right? When we went off the gold standard. Shortly thereafter, of course, we saw gold's best rally ever. And we saw the dollar's one of their worst years ever in 1973. And we've actually had one of the worst years for the dollar that we've ever seen. Right now, it is up 0.07 on the last day, but it's down nearly 10% on the year. So it's making it its worst year since 1973. And this is gold's best rally since 1978. Now, what did we have in the 70s? We had massive amounts of stagflation. Now, for those of you who don't know, stagflation is essentially elevated inflation, but limited growth. And so essentially everything just stays flat. And I think that's what we're seeing right now, is that we're seeing a year of potential stagflation. And I think that this next decade, that's what we might see, unless AI is able to catch up. Now, we're going to get into the AI bit a little bit later. But what I'm seeing out of this gold and silver run, I think, is very interesting just because of the parallels we're seeing from the 70s, right? I mean, in the 70s, we saw massive amounts of inflation because of the energy. There was some oil shortages and things like that. Now we're seeing massive amounts of inflation from the money printing that we saw from earlier in 2020. And then also, it's not helping with the tariffs. Look, I don't think tariffs are really inflationary, but that's beside the point. We're still seeing a bunch of inflation kind of going on. So either way, gold smashing through 4,500 an ounce, capping a year for the history books. It's escalating because of the escalating tensions in Venezuela. U.S. rate cuts that could be potentially ahead. We'll get into that later. And, we're not just seeing it out of gold. We're seeing it like out of silver as well. Silver's seeing some serious dominance. I did a video on that yesterday, who a lot of you guys tuned into. But either way, what we are seeing is this gold and silver ratio as well, kind of being in some alarming territories. Look, it's going down a little bit because gold has had a recent rally a little bit higher than what we've been seeing in in silver. But generally speaking, when we get up close to that 80 to 100 mark, that's when we're in recession territory, and we're at 63, so we're still a little ways away. But the reason why I think that it is not as negative as people are saying is because if you really take a step back and look at gold, right? Gold has crushed the US stock market over the last 25 years. Of course, this has been probably the biggest rally, right, that we've seen. But gold, generally speaking, has outperformed the S&P 500, especially, because of what we've seen from the massive amounts of money printing in 2008, 2000 .com bubble, and, what we saw in 2020. So we're seeing all of those layover effects right now, which has led to a massive gold rally. And so when you really break it down, gold be doing better than the S&P 500 actually isn't as negative as maybe the talking heads might lead you to believe. The talking heads are telling you, oh, gold's sending a massive warning, you know, to the market. This means a massive recession. Now, I do think that this chart is interesting, and we should be keeping a close eye on just how much it outperforms. But I think this speaks to just how, I guess, the fiat system has been working. Essentially, we've allowed a lot of zombie companies to become very big in dollar amount, but don't really provide a lot of value when it comes to, I guess, just globally. So we're rewarding companies that have the ability and the connections to raise a lot of money and get into that S&P 500 really quickly. So a lot of these companies are essentially zombie companies, and what we've been seeing is that the S&P 500 has essentially been carried by 7 companies, right? I mean, the Mag 7, you guys know the story, and it's essentially very top heavy. It's very AI and tech focused. And when you break it down, that might not necessarily be a good thing unless AI is able to carry GDP. Now, Elon Musk tweeted this shortly before I went live here, saying that he thinks double digit growth is coming in the next 12 to 18 months. He does think that, if AI is utilized properly, it can be a proxy for economic growth. And Pomp is even saying that the world's richest man is predicting double digit GDP growth within 18 months. Over 100% growth is possible if AI fulfills its true potential, which, look, I mean, I think at the end of the day, AI does have the potential to, flip some things on its head. But I do think, where for me, it's more of a wait and see aspect because, we see gold rallying, we see all these tech stocks, we see all these people essentially, you know, their ability to raise money is essentially second to none at this point, where, all they're doing is raising a ton of money and not really providing a ton of value. And then if you look at, the gold and silver ratios, like what we're seeing, we believe it's a worthwhile measure, but would stress that it's difficult, not impossible to state what the ratio should be, right? So when we're seeing this gold and silver ratio kind of, get there, is it sending a potential recession warning? The major gold prices did rally in 1980 and 2007, but it didn't really rally before 2020. So the recent recessions, we didn't see that. Obviously, like I said, there was the rally following that, which, it was like because of all of the inflationary concerns that we saw following. But what we have seen is, something that I think, takes some time here. So when we're watching how this is playing out, I think we got to keep a close eye on gold here, right? Because if gold starts to break out and really pump, how are investors going to react? How is the monetary policy going to react? I mean, we already see it here. There's less than a 14% chance. Let's see. If I refresh this bad boy, is it still? Yeah, 15.5% chance that we cut interest rates. But of course, there's still a lot of time. There's a lot of time left on the clock. As my boy Caleb Williams says, there was too much time left on the clock, right? 35 days. It's over a month. We're probably going to see this, what? I guess 35 days. Is that? That's late January. So we're going to see how this plays out by the end of January, but we're seeing a lot of bears come to the market and say that they're, worried about the health of the dollar, and they're worried when you see the S&P 500 rally. I mean, are we going to see above a 7,000 S&P 500 before the end of the year? Honestly, I think we might. And that's kind of scary to say that we could see the S&P 500 get over that. Because, the Santa rally, S&P 500 is closed at its highest ever. The ETF industry is also seeing its historic year, so more people are investing than ever before. US listed ETFs attracted a record of 1.4 trillion in net inflows. That's incredible. I mean, the US markets are absolutely massive, and this proves it. When everybody's looking for a safe haven, they're putting money in the US stock market above anything else. So when we start to see how the United States is really dominating the fiscal policy, you have to keep a close eye on gold and how it's going to react with all of this. So make sure you guys are hitting that subscribe button for me. It's Christmas. I'm bringing all this news to you guys on Christmas Eve. So be sure you hit that like, you smoke it like Cheech and Chong, hit the subscribe button. All I want for Christmas is 500 subs. So if you guys can help me get there, it'd be greatly appreciated. And I'll catch you guys all at the next one.